Recently, you've probably noticed something interesting. More and more people are suddenly talking about P2P. Not investing, not trading, not business models, just P2P. You see it in comments, you hear it in Telegram chats, and you start noticing videos popping up everywhere. Someone says they made money in 1 hour, another says it's the easiest opportunity right now. And suddenly it feels like if you're not doing P2P, you're missing something important. This is exactly how financial trends usually start. First, a few people discover something, then screenshots appear, then someone explains it in a simple way, then more people jump in. And before you know it, everyone sounds like an expert. It's the same thing that happened with crypto in 2021. One person bought Bitcoin once and suddenly started explaining macroeconomics to friends and family. Suddenly, everyone had a strategy, even if they only made one trade. P2P is starting to follow the same path. People hear the word arbitrage and immediately imagine easy money. Buy here, sell there, keep the difference. It sounds simple, and that's exactly why it spreads fast. Simplicity is viral. If something takes 5 minutes to understand, thousands of people will try it. If something takes 6 months to learn, almost nobody will. But to really understand why P2P is growing, you need to understand how money normally moves. Every financial system has a middleman. Banks sit between you and your transfers. Exchanges sit between buyers and sellers. Payment systems sit between your card and the transaction. And every middleman takes a cut. Sometimes it's obvious, sometimes it's hidden, but it's always there. For example, you send money abroad and pay a transfer fee. You convert currency and lose on the spread. You buy crypto and pay a trading fee. Then you withdraw and pay another fee. Individually, these fees look small, but together they add up. And most people never question it because it's been like that for years. It's like paying for delivery every time you order food. One fee doesn't matter, but after a year you realize you paid hundreds just for someone bringing your meal. P2P removes that structure. Instead of going through a company, two people trade directly. One person wants crypto, another wants fiat. They agree on a price and exchange value. No complicated system, no extra layers, just person to person. And that simple idea is powerful because it removes friction. But here's the key detail. Not everyone values speed the same way. Some people want crypto immediately and are willing to pay more. Others want to sell quickly and accept a lower price. That difference creates a gap, and that gap is where P2P money comes from. Let's say someone is buying USDT for 1.02. Another person is selling for 0.99. If you buy from one and sell to the other, you keep the difference. It's basically arbitrage, but simplified. No charts, no predictions, no market direction, just price differences between people. That's why it feels more understandable than trading. This is why beginners are attracted to P2P. It feels practical, it feels realistic, and it feels safer than trying to predict where Bitcoin will go. Because instead of guessing the future, you're just matching buyers and sellers. But here's where the misunderstanding begins. People think simple means safe, and that's not true. Simple just means easy to understand. It doesn't mean risk-free. Because P2P involves real people, and real people don't always behave perfectly. Someone sends money late, someone uses the wrong bank, someone cancels the transfer, someone takes too long to release crypto. Suddenly, your smooth arbitrage becomes stressful. Beginners panic at this stage. They expected automation, but instead they deal with human behavior. It's actually similar to selling something on Facebook Marketplace. Sometimes the buyer is normal, sometimes they ask 10 questions, sometimes they say they're coming in 5 minutes and never show up. P2P has the same human factor. You're dealing with humans, not algorithms. But expert users understand this. They don't expect perfection. They build a process. They choose verified traders. They use safe payment methods. They start with small amounts. They gain experience. Over time, they become faster and more confident. Beginners usually do the opposite. They chase the biggest spread. They trust random traders. They jump in with big amounts. That's like trying to drive fast before learning how brakes work. The tool isn't dangerous, the approach is. Another reason P2P is growing is trust. People are losing trust in traditional systems. Banks block transfers, payments get delayed, fees increase, and users feel like they don't control their own money. P2P feels different because it's direct. You choose the price, you choose the payment method, you choose the trader, you control the deal. This is similar to how marketplaces changed industries. Uber connected drivers and passengers. Airbnb connected owners and travelers. P2P connects buyers and sellers. When you remove the middleman, prices become flexible, and flexible prices create opportunity. However, the biggest myth about P2P is fast money. Many people expect huge profits immediately. In reality, P2P is about small differences repeated many times, maybe 0.5%, maybe 1%. Individually, it looks small, but consistency changes everything. Imagine making 1% multiple times per day. Those small gains add up. That's why expert P2P users focus on stability instead of huge spreads. They prefer reliable trades over risky profits because consistency beats hype. Right now, P2P is in the early hype phase. Some people think it's risky, others think it's easy money. The truth is somewhere in the middle. It's simply a tool. In the wrong hands, it creates mistakes. In the right hands, it creates opportunity. And that's why everyone is talking about P2P, not because it's magic, but because it's simple, understandable, and based on real price differences. And when something is simple and practical, it spreads fast. But here's the most important part. Most people still don't understand P2P. Some are afraid, some are overconfident. Both positions are dangerous. The best position is in the middle, understanding risk and understanding opportunity at the same time. Because P2P is not about getting rich instantly. It's about small edges repeated consistently. And over time, consistency always beats hype.